Thank you for joining us for Resintel's look back at Q1 and how the war in Iran has reshaped this market. We have a big crowd today. Great to see so many subscribers on the call with us, as well as familiar industry friends. For those of you who are new, I hope this presentation gives you a look at our unique vantage point into the industry and our platform. Resintel is the market intelligence subscription service of the Plastic Exchange, and we hope that many of you add to our growing subscription base by the end of this call. We publish over 300 reports total throughout the year, and our services range between $3,000 and $6,000 annually. If you haven't already, I encourage you to sign up to our free trial. A quick reintroduction before we jump in. My name is Dominick Russo. I'm the president of both the Plastic Exchange and Resintel, and I write our daily Resin Pulse report. I'm joined by Michael Greenberg, the founder and CEO of the Plastic Exchange and Resintel, and he writes our weekly report entitled Resin Sites. We both spend much of our day buying and selling polyethylene and polypropylene, which we've been doing for over 2 decades. We will be discussing our viewpoints on what has been happening so far in 2026 and what will shape the market going forward. This presentation may have looked differently a week ago, but that just stresses the importance of good, timely market intelligence, certainly in this volatile market. At the end of the presentation, I will be giving a short demo of our platform. I invite you to stick around. If you're unable to remain on the call, I will be hosting another webinar next week on Tuesday, April 21st, specifically to show off our tools and services. So enough of me talking. Let's get started, Michael.
Great. Thank you very much. Thanks, Dom. Thank you for everybody that's here and interested in the resin markets, which we certainly care a lot about. It's been a very interesting last several months. I'm going to start just touching upon what led up to our current market. 2026 already started on an uptick. Resin producers painstakingly rebalanced supply and demand dynamics during 4Q by maintaining dramatically reduced reactor rates while liquidating their burdensome surplus inventories, mostly into the export market. They really dumped the market to do what they had to do. They chased bids. Prices reached well down into the 20s, and it generated some very hefty losses for producers. But their goal was to rebalance the market, regain pricing power, and by late December, it looked like they were somewhat back in control. The market started out in January with a price increase on the table. Talking about after price increase on the table, we had a little winter storm, Fern, which caused some relatively minor disruptions in the petrochemical and plastics producing Gulf. And there were some Q1 cracker, refinery, and PDH turnarounds, which overall tightened up the what had been a very much oversupplied ethylene and propylene monomer market. None of this really, it was important at the time, but none of it really holds a candle to what's transpired since. Starting on February 28th, as we all know, the war in Iran disrupted world energy supply chain markets. Much of it hasn't truly reached the world. I mean, there's been a lot of reaction, but a lot of the shortages haven't really impacted because there's a lot of inventory throughout the supply chain, whether it be resin or crude oil, and Asia's not getting most of their crude oil, but they have crude oil reserves. And there's a lot of monomer reserves in Asia, and they're drew down. There's a lot of drawing down inventories to keep production to levels that they could. But that itself was a significant impact. Preparing for true shortages, which are actually kind of coming to light right now. All the all the oil tankers that left the Strait of Hormuz prior to the closure on February 28th, March 2nd, that's all arrived everywhere. All the containers with all the oil that's already landed, and since then there have been a small trickle of oil that's left, but for the most part, oil has been greatly restricted.
Yeah, and I think it's really important to recognize that much of the price action that's happened globally really has been sort of, it's impossible. It was really impossible to predict really what these shortages what the impact would truly be, right? And I think a lot of this price action that we've seen, through March and into April, in a way is a little bit speculative now. And now we're getting to the point where these shipments that were halted are starting to be missed, right? So, I think we're really going to start to be getting into a part of this market where we're kind of finding the balance, right? And what the fair pricing is.
This was a unprecedented resin supply shock, and we've seen a number of them. I think I'd like to joke that in the 25, 26 years I've been doing this, that I think I've seen now 7 storms of the century, which is pretty significant. But this is the first one. This is different. This is the first time that the supply shock didn't come from North America. It wasn't a hurricane. It's not a freeze. This was somebody else, some other regions that got impacted, and it's reverberated throughout, through the whole world. And it's very meaningful because, while the world has been, relying on Middle East monomer resin for a lot of years, China has really come on strong, and the world has really learned to rely on Chinese and Asian resin, and that has been impacted dramatically because much of the oil, the energies, the feedstocks, particularly liquefied natural gas, which is used to crack into, not only for power, but used to crack for monomer, that's been impacted in a huge way. So this is very interesting because North America doesn't have a problem, but North American prices are flying because the world has come to North America for replacement material. And I'm sorry that domestic processors are caught up in it, but the world is buying resin, and they're willing to pay higher and higher prices. And there's an opportunity for the producers to export at a higher price, and they're doing it. It's interesting because not only does the United States and Canada have a healthy NGL-based feedstock cost advantage, but we have plenty of surplus capacity here in North America that has already been tapped for our home region to provide replacement resin to the world. Getting into some pricing, polyethylene contracts increased 5 cents a pound during January and February. Much of it was implemented in January. By the end of February, it was all fully implemented into the industry. There was a March price increase that was on the table. It was initially nominated to be a nickel, but then it was, as this started to, the war started to happen, it got raised to a dime. And the 10 cent a pound increase in March was, easily implemented. The April price increases began to emerge, initially at a dime, then raised to 20. Dow came out originally at 30. Exxon and LBI followed, replacing the 20 with the 30. And you're looking at the real market leaders for polyethylene, and so it's pretty much a 30 cent April polyethylene increase. And we'll talk about the viability of that in just a couple of minutes. Stop for a second. If you want to go back to the map, Don.
Yeah, sorry. We've been getting some comments that the screen sharing wasn't working. So I was just kind of troubleshooting that. I think we're good.
Okay. What we have on the screen, that's it's our map. We've got hundreds and hundreds of refineries and crackers and PDH units and polyethylene and polypropylene plants, reactors all around the world. All the, which producers own them, what they make, what high density, low linear polypropylene, is it a PDH, what their annual capacities are. And we are constantly monitoring all the outages and trying to understand the true impact of the outages. Very quick. You could filter by which producer, which grade, which plants have been impacted, which ones have problems. We use this information. For us for our own trading, for us to manage our supply, demand, pricing expectations as we manage our inventory and our buying and our selling prices. Okay. So there's another. So on top of the nickel, 15 cents has been fully implemented in polyethylene, between January, February, nickel and a dime in March. And the spot market, it only took about 2 to 3 cents during January and February. But as soon as the war began, the market took off. I think, maybe you want a full screen of the blow molding now. At our last webinar, which was, I believe, sometime in February, we were mildly bullish. There was some momentum, and somebody that were on the call might remember saying, I see additional upside in here, but there's plenty of capacity that's not fully idled, but reactors are running at reduced rates. And if the market were really to get ahead of itself, I thought that additional production would come and probably limit the upside to a potential market, potential rally, unless something came out to change the market, which it did. And
there was no shortage of articles written about the global overcapacity that was out there, and how high resin prices were a thing of the past. And the industry definitely proved that these supply shocks can still occur. So
the polyethylene market, you just saw that chart, it really took off in March. By the end of March, polyethylene prices were up between 30 and 34 cents year to date. And March contracts were only up 15 cents year to date. So it was very sensible for any polyethylene buyer that has contracts to buy every pellet possible on contract up 15 cents. I mean, the spot market was already up another 15 to 19 cents during March. And the writing was on the wall that, with 30 cent price increases for April, buy all the pellets you possibly can in March. Dominick began writing our daily, I think it was March 2nd, our first business day of the war. It wasn't wait and see, it was buy. Excuse me, buy your polyethylene, buy your polypropylene, buy it now, don't wait. The more you buy now, the better off you're going to be. It changed. It got very, very bullish. The first day of a hurricane, you don't sell, you buy. You don't wait and see, you buy. And this was our message, and we did it. A lot of our trading partners did it, and a lot of the processors we deal with, they were all buyers. And if you look at this chart of domestic sales, yeah, the industry bought. It's funny and hard to say that that a 10 cent a pound price increase for March was a favor, was a gift. It was a gift. It could have been more.
At the time, it may not have seemed that way, but looking back, I think U.S. processors definitely saw the writing on the wall.
I mean, the spot market was already up another 15 to 19 cents, during March. So yeah, and they took advantage of it. You see, and you've got you've got record
domestic
presence sales,
and record production.
Yes. Producers saw it too. They knew that they were going to be called upon, and they started buying up ethylene and started running the reactors harder. The price of ethylene went up from 18 cents up to, I think, peaked to 35 and a half. But the price of ethylene doesn't really affect the price of polyethylene at this point. But the fact that ethylene continued doubled showed just how much pull, because there's plenty of margin between ethylene and polyethylene, so it doesn't really affect the price. But it showed just how much ethylene demand there was, that was taking a well oversupplied monomer market, and the price doubled in 30 some days. So by April 12th, April 13th, the market was up. The polyethylene spot prices were up 40 cents on average. HMW for film, which is probably the scarcest resin out there, that was up 46 cents. So that was actually up the full 15 plus the full 30 plus an extra one, I guess. And at about 25 cents, as of a couple of days ago, about 25 cents of the 20 to 30 cent price increase was already priced into the market. The market kind of got a little bit toppy the last few days. We've seen this trend ever since the start of the war, where oil market runs up on Sunday, and the market tends to come off on Monday. The psychology, get a little bit of a psychology shift on Mondays, which are generally slower in the industry. Anyway, and we've seen pauses on Monday, and some of the negotiations have been going on with the war and a ceasefire, and indications that perhaps we're going to find an end to the conflict, and maybe some ongoing solutions. Really, what's happened is the prices run up so fast, and who is chasing resin at this point? We just showed that in March, domestic buyers, they bought ahead, and they put themselves in a very, very good position. That look, rail cars are still showing up. Well, by now they've pretty much all shown up. The rail cars that shipped late March, that was up 15 for the year, you haven't tapped them yet. Are you in a real big hurry to go buy big volumes up another 30 cents? Yeah, maybe not. Many are well positioned, and we're seeing a lot of, of course, there's still, spot cars that we're selling and trading, and a lot of truckloads as companies want to, minimize, some want to minimize at this point, with the market up as sharp as it is, minimize the pounds they have to buy at this level. But the big question is, like, how high does it go, and how long does this last? And if it's going to last a very, very long time, there's a good chance the market's going to have another couple of waves. But there's still some, at this point, with the market up as much as it is, some caution entering the market. Yeah, it's fair, totally fair.
Michael, and I think one thing that's important is that exports were not as strong as it really felt like they were. And I kind of pulled that chart up. Exports in March were not even as high as the final 6 months of 2025.
So this is a huge point, and
I'll recircle it.
You know, look, I've been watching American ACC, American Chemistry Council fundamentals, supply demand fundamentals since 2006. We've been tracking them, we've been studying them, and it's interesting. Like sometimes you feel something in the market, and sometimes the empirical data doesn't support it. And then at other times later on, there's adjustments that are made that's like, aha, I knew it. The numbers, the preliminary numbers weren't really right. Sure, some adjustments came. I would say that during March, and we had, I mean, our volumes were almost twice our record, okay? And they were more than twice our average. And our exports were 5-6 times our, 4 or 5 times our average. Spot prices took off when the war began, and the export market was driving the price. Domestic prices were actually lagging, and we were buying, I mean, dozens and dozens and dozens of rail cars, domestic rail cars, shipping them to Houston, bagging them, and exporting them. So we were taking a lot of domestic resin and exporting it. Pure export offers through export departments, what they report is one thing, but a lot of the domestic sales that we saw, yeah, I would say a lot of those domestic sales were absolutely buying ahead, building inventories, building stocks, building buffers by domestic processors. There was also a lot of domestic resin that I think was misclassified. And only when we see a lot of the true, government export, port export numbers, I think we're probably going to see that a certain percentage of the tremendous domestic sales were actually exported. Because right now the export numbers, yeah, I mean, they were good at what, 2.656 billion pounds. They were good. They were fully average, a lot better than they were in February. But
yeah, I quickly remade this chart to show just the trailing 12 months, right? And this red line represents the average. So we're just a touch above the 12-month average.
Can you take it to 2 years, please? You could just do the date range next to it. Okay. Yeah, the numbers don't show what we felt in the market and what we saw. I mean, we're still like 500 million pounds below December 2024, which was the all-time record, 3.17 billion pounds. I think that I think that we're going to see, and there's also some timing issues. A lot of the exports were done through intra-company transfers. Exxon transferring resin to Exxon in Asia and then selling it there either through their international sales teams or joint ventures. Some of that, there could be some timing issues on when official exports and sales are booked. We saw back in November and December, we had polypropylene, we had that same kind of a situation where sales were very, very low in November, didn't feel like it. And then they were extraordinarily high in December, and it was just a timing issue. So I think that we're probably going to see some kind of some adjustments that smooth out some of the ACC numbers that we just saw.
Yeah, and let's kind of connect the dots here, because it's part of this is where we're going, right? So, you and I have talked about it at length that the strong domestic buying in March leaves domestic processors pretty well stocked up going into April, right? I mean, the U.S. economy as a whole has not really structurally changed where demand has really grown to soak up the amount of pounds that they bought additionally in March. So without that strong export and the race up in price, with where prices sit today, and what we're feeling is a little bit of pushback from the export market now. we've kind of shown that we've taken our resin index prices down to kind of reflect that at the moment there's some reposturing happening.
Yeah. As we get deeper into into the second half of April, domestic processors, contract buyers are going to they're going to look at the spot market, and they're going to look at their feelings towards May. And if there's any inkling that the May 27-pound increase is starting to look like there's legs, you'll see a surge of domestic buying on contract, and it's going to push spot prices higher. And you'll see some good strong domestic sales in the last 10 days of the month, if they anticipate that May is going higher. I'd like to talk a little bit about the war and what it's done. We all know, look, there's more news stories and consulting stories
Michael,
that are out
there's a
there.
good question that just came in, and I want to answer it because I think it's a good one. Is that pushback in the export market regional, one region more than another? Have you seen any come off? Now they're flowing. So yeah, is the pushback regional? I mean, yeah, I think we really saw in 2025 exports to Europe really pick up and increase, and I think that the pushback from Europe is less than I would say we're getting from than other regions at the moment.
So what's caused some pushback?
It's still pushback all around.
I'm sorry?
But still pushback in general all around. But I think varying degrees.
And from where? Okay, so every day there are fewer pellets on Earth than the day before. It's been going on for 40 some days. We're consuming more than we're producing. A lot of production is down. There's some demand destruction that's going on. There's some inventories that will be drawn down, but fewer pellets exist on Earth, and that's going to happen for a while. When you look at some of the things that happened during the war, which will lead up to what regions are softer. We all know 20% of oil flows through the Straits of Hormuz. And then Saudi Arabia opened up their pipeline that gets their oil, somewhere around 7 million barrels a day. That gets it out through the Red Sea and out through the Mediterranean. So that started bringing some oil back into the market. But at first, what was happening was there was a lot of disruption, and the disruption was significant. And it caused a lot of the Asian petrochemical producers to slow their production because they were going to run out of monomer. Eventually run out of monomer, and they had to ration what they had. So a lot of there was a lot of Asian demand early on, right? In India and in Asia, Brazil, Latin America, a lot of demand. Europe, crazy demand through March. Crazy demand. It's like there's an offer, you buy it. Okay. You say, oh, I've got 3 cars of linear hexene stiff black. I'll buy it. Oh, by the way, what's the price? Anybody that the price is 65 cents. Anybody who said, okay, I'll pay you 64. It's like, no, come on. You don't play that game in this market. And that's what happened in March. You got an offer, you bought it, or you didn't. And pretty much all offers were lifted, pretty much immediately. Okay?
Yeah, very quick. Offers were good for hours, really.
At that, hours, but subject to prior sale, then they're pretty much gone anyway within the hour. We talk about intercompany transfers. A tremendous amount of resin was sold off in large volumes into China, and a lot of the Chinese production got hit badly. And their exports, like Chinese producer exports, got curtailed. They needed the resin internally, but the U.S. was selling gobs and gobs of polyethylene to China and to Chinese traders. And the traders in China and in Asia are very strong, stronger than the producers. And the resin that got dumped when we started this call, the resin that got dumped in the 20s and in the 30s back in November and December, okay, that got the rail cars got shipped, they got packed, they had to get on vessels, they get overseas, gets into a warehouse. That material is sold. That's all good. That stuff sold in January and February, and then the resin that got shipped out in January and February, much of that was instantly sold, but a lot of the traders held on to the material, and then the resin that started shipping in March, as prices really started taking off, that's some of it's already arriving, and some of it's going to be arriving, in the over the next several weeks. So the traders, the traders who have cheap resin are re-exporting it. And
yeah, one of the questions asked about Chinese exports, and it's not necessarily Chinese produced material that is being.
That's right. Some of it is Chinese produced. Traders have
absolutely.
Chinese produced material. They got Middle East produced material. They got a lot of U.S. produced material, and it's re-export. And the traders are holding it, and they're selling into the market, and they're consistently selling. Like, look, if they own resin at 40 and they could sell it at 80, yeah, maybe they could sell it at 87, but they want to sell high volumes and they're selling it at 80, and that price has continued, like their under the market price has continued to rise as they burn through the resin, the cheaper resin, and more expensive resin is arriving. But recently, we're seeing it a bit more aggressive. We're seeing Chinese re-export more aggressive, and because there was a little bit of a lull of exports. But a lot of the material, I think a lot of the producer material got sold in large volume to traders, and that's coming back.
So we're seeing material from the U.S. U.S. producers are very serious about these higher prices, right? There isn't a lot of deal making that we're necessarily seeing quite yet, even though we've kind of well documented in our reports that the urgency is slightly off for the moment, but as we've seen, this can all really change very quickly, right?
So during March, it was interesting. It was very, very, very difficult to buy prime export resin in March. Very difficult. Off-grade flowed. Off-grade was being exported. Producers wanted to keep off-grade out of the domestic market. They wanted to restrict spot availability, and they wanted their contract sales. I mean, even at +10 before they knew that it was going to be +20 and plus 20 and 30 next month. They wanted strong sales, and they got them. And they didn't want off. They wanted to lift the bottom of the market, and they wanted all off-grade gone. So we traded a lot of off-grade. We sold a lot of off-grade export that was available. The major export channels, the huge multinational trading firms that we all know, they got their supply was greatly restricted in March. If someone buys 50 rail cars of 5502, maybe they were given 10 or 12 or 7 or 18, but not 20 and 30 out of the 50 that they wanted for one grade. They were fed some, but not a lot. Channels always need to remain open, but the producers didn't really need their export channel, their traditional export channels. I mean, sure, they sold plenty through them, okay, but it was producer intercompany and producer direct sales was the vast majority of export material. and they wanted it out of the trader's hands, and they didn't want it coming back, or whatever it might be. In April, prices jumped 35, 40 cents, right? Now in April, we're seeing the market stall a little bit, and now the producers kind of need the exporters. And it's okay, you didn't want to sell me resin at 50 cents, but now that it's 80 cents, you want me to, you want to sell me 20% of my allocation. But now that it's at 80 cents, you want me to take my full allocations.
Yeah, and I brought up a change in inventory chart, just to kind of show that, inventories didn't really draw down as much as I think it seemed like they might have, right?
Once again, I think this is a timing issue. I think it's a timing issue. I think that inventories, I think that you'll see that exports will prove to be much larger than initially reported. And I think that we're going to see some, and it might not be restated, but it might show up in April. And
Sure.
you might see a huge drawdown in April, but I think you also might see, depending on what May's looking like, you might see domestic sales really drop off also. So I think there's going to be some shuffling around of some of these numbers, whether or not they're restated or they're going to show up in April. Yeah, but I really want to talk about what was going on in the war. At first, you had massive disruption. Okay, there was oil's not flowing, oil prices got expensive, naphtha became very expensive, feedstock costs went up. NGLs, that's the cheap stuff. That becomes monomer. That's the cheap monomer. That got hit and that got shut. And when Qatar halted their LNG production and it got damaged, and they say that's like 3 to 5 years before it can be restored. That's a big deal. We started shifting, about mid-month, and late in March, we started shifting from just disruptions to destruction.
Yeah,
And
there's a noticeable shift in kind of intensity of the attacks, and the petrochemical industry really seemed like a target in the region for that last 15 days of March, I would say.
So and because of this, I think it's really important to make a distinct difference between, like, the world talks about oil, and the headlines were very bullish with oil, and now oil prices come off. And even from the beginning, I say, look, there's a sweet spot for oil in this market between 90 and 100. Okay, below 90, below 85, you're like, okay, it's expensive, but I can deal with it. Above 100, 105, even get to 119. Above 100, there's a lot of pressure on the administration to get finish this, get the oil flowing. You're hitting the economy. The world's getting impacted. Not so good, right? So above 100, there's a lot of action that happens, political behind the scenes action. So it's between 90 and 100 right now, and it's kind of livable. Pressure, but livable. That's the headlines. A ceasefire, it's a headline. We haven't seen, we talked about this earlier in this call, we haven't really seen the actual shortages happen. We saw a lot of drawdowns, we saw a lot of anticipation of LNGs not showing up and pellets not showing up, or pellets being produced, or crude not showing up. A lot of anticipation, a lot of inventory drawdowns around the world. But now we're starting to see the lack of monomer and real production hits. As I said earlier, there's a daily deficit that's building. And when there was disruption, if you had a ceasefire after a disruption, you could kind of map out how far the light was at the end of the tunnel, and how long can you hold out, and how much demand destruction was there. You can model this. But now that there's like destruction, it's kind of hard, and we don't know the full extent of all the destruction. But Israel hits Iran's, both of their petrochemical complexes. They're not going to be producing resin. They export, they're about 4%. We're showing.
We've been working hard to keep it up to date, but yeah, you're right. You really don't know the full extent of the damage.
Yeah,
It's very
we've
difficult to get it.
83 major disruptions and destructions. 83 of them. Who they are, where they're at, what they make. You need to integrate the total volumes that's being impacted. It's hard. It's hard. Not everyone's talking. It's hard to discover this information. Okay. But about 3.8, maybe 4% of all polyethylene is produced in Iran, and 85% of it is exported. And it's exported primarily to Turkey, to India, to China, which is the low price bottom of the market, essentially. So a lot of this is cleaning up the bottom part of the market, right? Yeah, China's not getting their oil from Venezuela. They're not getting their sanctioned oil from Venezuela. They're not getting their under the table sanctioned oil from Iran. Their costs are going up dramatically. Yeah. When they started, some of the tit for tat retaliation became a big deal. You know, Israel hit Iran's petrochemicals, took off 4% of world capacity. But you know, acknowledge that the world has excess capacity. Okay, just because 4% is taken out doesn't mean okay. Well, the market's had excess capacity. It had excess capacity for the year and a half before this war started. Right, but is the monomer going to get there? Okay, China's doing a lot of coal to olefins at this point. At a certain price level, it works, and they need the monomer. They're using coal. They're finding a way to get the monomer. Yeah? But after Iran's petrochemical complexes got hit, yeah, you know, we saw that they attacked Saudi Arabia and their petrochemicals, and an Exxon JV and a Dow JV, and you know, the Chevron Phillips JV is kind of at risk, kind of not hit, kind of quiet. Didn't happen, might have happened. Bahrain's petrochemical infrastructure got hit. You know, and this has led to you know, the lack of olefins getting to Asia. You know, latte. You know, they've been, you know, they were forced to massively pull back their production or do shutdowns. You know, and in China, you've had several crackers that are cut. They don't have the LNGs. You know, you've got in India, they've been cutting production because they're not getting the monomer. Okay? And that's part of the pellets just aren't being made. A lot of pellets in the Middle East, they've got nowhere to put them. You know, a lot of the oil and gas loading facilities, they're shut at this point. They're shut. They're leaving it in the ground. Their tanks are full. They got nowhere to put it. It's in the ground. Eventually, it's going to be brought back up again, but it's not just sitting there. You know, recent reports, 120 oil tankers have left, stopped waiting to enter the Straits of Hormuz to fill up, and instead are coming over to the U.S. Gulf to fill up oil over here. Well, what's that going to do? You know, it takes a long time for those tankers to get here. Then they get filled up, and then they're going to go ship to the rest of the world.
Yeah.
They're going to have to eat, and then they're going to have to, you know, when the straits are reopened, and they're going to get reopened. The tankers aren't there anymore. The tankers have left. Tankers have left. They've been sitting for 40 some days. They left. I mean, some of them are still probably hanging out, but it's going to take some time for them to fill up here, empty there, go back to the Middle East to fill up again. And you got some serious logistics displacement that's coming also. So
yeah, so I think in interest of everyone's attending, to move on to PP, I think the point that you're making is, you know, everything isn't resolved all of a sudden because you know, peace deal might be in the works, or the Strait of Hormuz reopens. Like all this stuff still has not been shipping for 45 days, and logistics is, you know, tankers are in the wrong spot, or they're heading here to refill. I mean, really the move in this market was kind of, we're gonna see a shortage of material, not only upstream to make resin, but of resin flowing out of there, and all that really is not flowing fully right now. And I think, like I said, right now we're starting to get into that. We're getting into that part where we mentioned earlier where we're kind of running out. So, but why don't we move on to PP?
And I think that and we were saying that we were trading the headlines. I do think that we're just being an overall shortage market for 4-6 months.
Yeah.
Prices are going to move around. I think that we're going to get into some situations where it's like, running out of the pre-buys. Now I got to come back to the market because the market's not going to. Yeah, we're going to look. The market just took a pause. We came off a few cents. We'll see what happens. But I think that we're going to see some additional surges again. I don't think that this is over. It might be over the run.
In the near term. Yeah, I think in the near term we've got some softness here, and very well could be another surge higher at some point. But I think what I mentioned very earlier in the presentation was that this would have been a different presentation a week ago, right? But the last few days, and again, Michael and I we're buying and selling all day. We're active in the resin markets, so we kind of feel these little shifts that happen. And with our service, we kind of bring those right to our subscribers. So last couple of days, we've been talking about the urgency being off, market feeling softer. Took our prices down this week, which is the first time in a while. So yeah, I think in the short term, we're going to see a little correction here. But then as some of these issues are felt, we're going to find some stability and very possibly head back up.
I want to touch very quickly on our methodology, and then I want to talk about polypropylene. Okay. When I talk about our prices, the market's up 35 cents, 38 cents, 40 cents. Okay, we've pulled our prices back through. We have a methodology. For the last 25 years, we've been, we buy, we sell, we inventory resin. We've been making a market in all the commodity grade resins for the last 25 years. We post our prices publicly, they're available, and the resin's for sale. Our prices, our methodology is you could come buy whatever the volume is, a minimum of 20 metric tons available and minimum to transact at our numbers. But say 5502 grade, blow molding. Okay, we have the inventory. Our price is the price that is for sale right now. You want to buy 20 tons or 100 tons. This is the price right now. Could it be cheaper? Maybe. If you want to wait a month, we want to pack out rail cars, but cash and carry right now, this is the price of each of the commodity that's available right now. And so we evaluate our prices every day. Sometimes there's no reason to change the price for a week or 2 weeks. Sometimes the price goes up, sometimes it goes down. In a crazy market, we've had prices go up and down in the same day. We've had multiple price changes during the day. And it's based upon, it's mostly based upon our replacement cost, because we're constantly selling and we're constantly refilling our inventories constantly. At some point we say, do we want to replace it? Do we want to liquidate inventories? Do we want to build up our inventories? That all comes into play. That's what our market intelligence is about. It helps us manage. Is this a good price? Is it worth it? What's overall supply demand looking like? How do we want to treat our inventories? So Resintel is the market intelligence platform that we use internally. We've been using it for years and years. Available now, the new platform available to the public or to subscribers. But that's our methodology. And I'll tell you, in 25 years, we've never made a non-market adjustment.
Yeah, I mean, we take a lot into that. We have our own activity. We also are speaking with market participants, producers, all sorts of different intel throughout every day. So we take all that into account. And the important thing, Michael kind of touched on it. There's many different prices that happen in the resin industry throughout every day, but direction and scale of the moves, I think, is the most important piece to look at when looking at our resin deck. So, so let's move on to PP, Michael.
Talk about polypropylene, and at some point down, maybe you could come up with a chart that shows the delta between the domestic polyethylene price and the export polyethylene price, domestic and export, and what's happened over the last 60 days. That might be interesting, or the last 20 days. Okay, polypropylene. Okay, so PGP plus market still firmly. PGP prices were up 2 cents in January, up 4 cents in February, and up 10 cents in March. Monomer contracts in March was 46.5. The market was up 16 cents for the year, started at 30.5. March is 46.5. But very interesting. There's the contract, PGP contract prices. I think it might be very interesting to show spot PGP prices versus contract also, and what happened during March. The spot average for PGP, it ended around 40. It was about 47 cents, 46.9 something, I think. The spot average, and we typically see about a 2.5 to 3 cent premium over the spot average. That becomes the contract price. So contracts, easily could have been 49.5 up 13 cents, but they were only up a dime, which like polyethylene buyers got what I'll call a gift of only up a 10-cent increase in March. Polypropylene processors, domestic buyers, also got that exact same gift of only 10 cents. And why was it a gift? Because by the end of March, PGP prices, spot PGP prices had already traded 60. You add 2.5, 3 cents, that shows that April at the moment could have been 63-cent contract. And you're looking at 46.5 cent monomer. If you're a monomer plus, say it's monomer plus 15, you're at 61.5 cents for polypropylene. You are a buyer. You're going to max out your contracts. You're going to buy every poly.
When we look at this chart, mid-March, you don't know the price of PGP contracts necessarily mid-March, but you can see here that PGP contracts typically kind of stay above spot PGP. I mean, that's not true all the time, but at least this year, right? But here we've with Resintel, we've been able to do a spread of spot PGP and PGP contracts, and you can see here that for the back half of March, how much the delta is between the two. They're really negative for this time period.
I mean, what's showing is that spot prices were continued to build a premium over March contracts, and that just shows you what April contracts are going to do. So if you know that April contracts are going to be up a bunch, you're going to go buy as much as you can in March and max out your contracts. And similar to what we saw in polyethylene, polypropylene domestic demand was fantastic. It was great. It was a lot of buy ahead demand. Can't blame them. We encouraged it. If you had the chance to buy on contract, max out your contracts because it's going to be way the heck higher in April. Not only based upon PGP, but a whole slew of price increases, margin enhancing price increases have been issued. Anywhere between like 7 and I think 17 cents of monomer increases. Look, it's of margin increases. I'm telling you, I've been doing this for a long time, and it is very, very difficult to get a margin increase when monomer prices are soaring. Okay, because you're looking at 30.5 cent monomer, now it's 46.5 cent March contract. You're looking at something around, just say high 50s, maybe 60 cent average. Maybe just say 60 cent for monomer. For contract monomer, it might be a little bit lower, might be a little bit higher. We'll see. But instead of wanting monomer plus 10 or monomer plus 15 or 20, now they want an extra 7 to 10 cents. So instead of it being monomer 15, maybe it's monomer in 22. Well,
we definitely saw that not only with contracts, but also spot. We definitely saw we saw some more spot deals being done, not at just a flat price, but on a PGP plus basis. And from month to month, those spreads definitely widened.
So we saw similar, love ACC, love the data, supply demand data, fantastic. It's really, really, really important. I kind of felt the same kind of thing happen in polypropylene that we just discussed in polyethylene.
Yep.
I think so.
And this
So,
chart shows the domestic sales being very strong in March.
and they should have been very strong, but I don't know if they were. We bought. It was very hard to buy prime poly. It's very hard to buy prime polypropylene export in March. Producers didn't seem to want to do it. They didn't know where monomer was going to settle. They didn't know what their spot costs were going to be, their actual monomer costs were going to be. And they were very reluctant to sell, and they wanted to sell on monomer plus, if at all, exports. And for an international buyer who's on another continent who has no idea about the dynamics of the U.S. propylene market, it's very difficult for him to buy polypropylene from the U.S., not knowing what their price is going to be until PGP contracts settle. They want a price. What's the price? I'll buy 200 tons, but I want to know the price. Well, it's PGP plus this. We'll see what PGP does. Not so easy. Not so easy. We thought from the beginning that polyethylene exports would be tremendous. And once again, I think they were way, way, way more than the numbers show. I thought that polypropylene exports were going to be very strong, but it was going to take longer to ramp up. All the export channels exist for polyethylene, but polypropylene export channels aren't really there. It's not a traditional export resin. 4 or 5% of all, so about 50% of all polyethylene sales go exports, okay? And linear is like 57, sometimes 60%. And polypropylene, 4 or 5% of all sales are exports. So it's a very, very small market. 60 million, 80 million, 90 million pounds. It's relatively small. And a buyer, I mean, just imagine me like a buyer of raffia grade in India or Bangladesh, and you buy from Reliance. Reliance doesn't have the material. All of a sudden, you're like, where can I get it? Well, let me go call Exxon in the U.S. see if they have polypropylene for me. I mean, not so easy. Not going to happen. Their market's fragmented. The channels are not open, and it takes time for the buyers and the sellers to find each other. Look, we did our part. We sold a lot of export polypropylene, but we thought there was going to be a ramp-up period. I kind of thought there might be an extra 40 million pounds exported in polypropylene in March. But I'll tell you, like I said, the producers did not make it easy. The pricing was very difficult. Where we were buying, export polypropylene last year at monomer plus a very modest single digit, at a low monomer price, it was exportable. I know there's shortages out there in polypropylene, but all of a sudden, prices are in their 70s and the 80s for export. Not so easy. I feel like the polypropylene producers were PGP and PP producers. They probably should have made March contracts a little bit higher. And they should have worked the export market more. And as long as the monomer market was going to take off to 60, the low was 24 cents back in October 20th. But, essentially
the PGP settlement
was too low.
It took the first part of March heavily into account, and that's fair for sure. But I think it with how the second half developed, it definitely was a signal for anybody that could max out their contracts to do so. And the numbers support that from ACC.
So China has more polypropylene production than their domestic needs. They can export, and they are exporting. And there's a limit to they have PDH, and they got coal to olefins, and their polypropylene they've got capacity, and they don't consume it. So there's a limit to the upside of polypropylene in here. I think in polypropylene, I think polyethylene and polypropylene, both of them, the prices went up too fast. I think that one of the reasons why we're really stalling right here is that the market needs to digest. It's like give the market a break. Let the price become the price, and then all of a sudden it's no longer available. There's a new price. Like stepping the market higher. It's a lot healthier than just like 2-3 cents, penny. I mean, it's average a penny and a half, 2 cents every day. It was just too much. Let the market breathe. Let it digest this level. Is it going to go higher again? I kind of think it's going to. For now, it's going to pause. I think that the prices rose too much, and they didn't capture. Polypropylene did not capture the export market when they had the chance, which was early March. They didn't want to sell exports, and they could have gotten a lot of polypropylene demand that was going to continue through March, through April, through May. It's hard to get these guys at 80 some cents a pound to 80, even 90 cents packaged and shipped. I know there's shortages, but it's a big number to all of a sudden get a new customer at. So
yeah, but I mean, many of us who've been around remember the COVID market and the freeze after that, right? So we're not in completely uncharted territory. And an interesting question that came in, I think, is worth touching on, because we kind of talked about it earlier, where it's really difficult to really accurately predict what will be sucked out of the market in a situation like this. And the question was, how much was justified supply disruption versus capitalist speculation, right? Yeah, I mean, I think prices rose really quickly. I think during that COVID market and freeze, the spot market really took off very quickly, right? And contracts did not necessarily capture as much as the spot market really had. And I think in this instance, producers kind of, coming off of the 2025, that was really a difficult market. No secret, we talked about on the last webinar, the second half of 2025 was really difficult. Prices down, people with inventory hurting. I think producers this time around did not want to sort of miss out, if you will. It's difficult to say that. I know many are probably rolling their eyes, but if you remember during that COVID market, the contract market did not increase nearly as much as the spot market had.
I think spot traded like 50 cents, like polypropylene traded like 50 cents above contract. They couldn't get their price up fast enough. And yeah, they didn't want to miss it this time. And they also came off a very nasty 2025 where, look, they had huge losses. And they're like, here's a chance to get it back. And they got it back quickly, But is this sustainable at this level? Yeah.
No.
During COVID, blow molding prices went to like $1.15, and homopolymer, copolymer prices went to $1.35, $1.50. It's not. Yeah, we're not in uncharted waters. I think the market is breathing right now. I think we're going to see some more surges. I think we're going to see real shortages in the market. I think that there's room. I think there's room to the upside. But I think the market, I keep saying the market needs to breathe. The market needs to consolidate a little bit. Needs to, if the war ends tomorrow, yes, oil prices are going to come down. There's going to be headlines. There's going to be, there's going to be relief. But I think that there's going to be a shortage of resin. And I think that's going to continue. So I do expect some more. Now we got to see how things develop, but I would not be surprised, or anywhere between I would not be surprised, and I would expect to see some additional waves over the next several months.
So is it capitalist speculation? I mean, we're seeing materials trading at these levels, all day, every day. I mean, I wouldn't say that it was a vacuum where prices didn't trade along the way. I think the way that we saw prices getting scooped up as we headed north kind of showed that these levels were, not just sort of priced up there and said, take it or leave it. There's definitely plenty of business that was done along the way. And even though inventories for both polyethylene and polypropylene didn't draw heavily, they also didn't build in a major way either. So, I think we'll get into if the fighting ramps up again, we could be talking something different, but for now, the fighting has sort of cooled down, and there's an effort to get the strait fully reopened.
You have to see how much.
I think we're entering a period here where we'll kind of sink back and find more of that, where the level kind of should be, what's justified, what makes sense. So
if the war flares up again, you're going to see another upward spike. If the war just continues as it is, look, every day the strait's closed, it's getting worse and worse. Okay, every day that there's tensions, and like I would not want to be, with missiles flying, I would not want to be a repair guy at a refinery. When missiles are flying overhead. Okay, it's going to take some time to fix this. It's not like you can go get like all these compressors. You can't go to Home Depot and buy them. They need to be made. They need to be shipped. It's going to take some time before all of this fixes, which is why even if the war ends tomorrow, I think there's additional waves. If the war flares up again and there's additional significant damages to other petrochemical plants or plastics plants, even, yeah, I think that you'll see a pretty sharp spike.
Yeah, we got a question here that said, what should we be looking for into Q2 to kind of keep tabs on this? For PGP, it really has, speaking on polypropylene, PGP really has kind of ebbed and flowed with crude. It's sort of gone and gotten into this, where they move together, which hasn't always been the case, but it is happening right now. And, PGP has come off the last few days, solidly.
PGP was driven by reactor demand, by some speculation, of course, right? But by producers saying, I need more monomer to make more resin. And that's what drove the price. It's not a cost push. Yeah.
No.
Is it correlated with crude? Is it correlated with crude? Yes. Okay. Propane, PDH, cash costs, definitely. But this one is coincidentally coordinated, with crude. This happens to be a big monomer pull right now. What do we watch for in here? And when it comes to pricing, we'll see. If this goes on for a long time, and the shortages really become acute, you're gonna squeeze out. And companies around the world need to chase resin. They will bid the market up to get the pounds that they need, and there will be elastic demand that falls by the wayside. And like we saw during the COVID market, during the freeze market, the prices, they went parabolic. We're in a parabolic throw right now, but which is why I think there's more levels to it. But when you're in the final stages of a parabolic market, it's the inelastic demand that says, I need the pellets. There's value. I need the pellets. What do I have to pay to get them that the other guy won't compete for them anymore? And that's how the market finds its top. Eventually, when that's satisfied, and then he gets what he needs, or the market gets what they need, and then there's a level beneath it where the elastic demand comes back. Yeah. So during COVID, during the freeze, you had such shortages. We had that, okay? And in this one, we haven't really had the shortages yet. It's been about the anticipation for the shortages. If the shortages come to the point that, like, I need pellets, I need them. If I don't have the pellets, I can't operate. Right now, they're chasing supply, getting ahead of it. But there's no lack of pellets. At a price, you could get a pellet. We'll see.
Absolutely. Any more comments?
I have a very, very good, interesting question that just popped in here. How's the relationship between prime and off-grade polyethylene pricing changed? It's widened a lot. There's a big discount for off-grade right now. And it's partly because prime is getting really expensive and off-grade is still out there. Off-grade prices have come up a lot. And there's good demand for off-grade. But, as the market gets higher and higher and higher, traders, exporters, We all have inventory that rolls, right? When the market gets higher and higher and higher, you look at the risk of the liquidity of your inventory. And as someone who manages inventory and trades, I don't want to carry a lot of off grade. I'm willing to sell off grade for a lot less because it's not as liquid. The market turns. Prime is prime. Okay, I could sell prime at a price, no matter what the price might be. I could sell it. Off grade, you got to find somebody who wants the off grade in a falling market where prime is plenty available. People don't necessarily want off grade.
Yeah, I mean, off grade isn't made on purpose, right? So, I mean, many of us don't build our businesses solely around off grade because the availability ebbs and flows.
So people are willing to hang on to prime. Talk about some of the speculative stuff, the buy ahead, the buffers. They don't really want to hang on to off grade. So the delta between prime and off grade is widened, and it's wide. Normally it's 2-3 cents. In this market, 7, 10, sometimes 12 cents.
But there's a lot of variables that go into off grade and therefore also recycle that change those spreads.
Here's one other one. I know we're talking for a long time. How is it going to affect the high density regrind market? Like, just like there's alternatives. I mean, if high density is 80, 90 cents, and you can manage to run regrind or blend regrind, and to make your virgin last longer, or if you could use repro, so there's demand for regrind to make repro, blend your repro or run repro. You're going to see it hasn't really taken off like it hasn't because it's been fast. It's been very fast. But I would think that if the market stays up here for a long time, I would think that all regrind, repro will see significant rises in price. Awesome. And especially post-industrial. If there's post-industrial, you're going to find a way to use it before you get rid of it because your prime price is really, really high. So you get scarcity in post-industrial. We're not big regrind, repro guys. It's not really what we do, but it's just the trends that we see in these kinds of markets.
Yep, absolutely.
Thank you, everybody, for listening to us talk. There's a lot to say. I hope it was interesting. I hope it was informative. I hope everybody either learn some or reinforce some feelings that you guys had. It's okay.
Yeah, if you have any more questions or we didn't get to your question, please reach out to us, Dominick at the Plastic Exchange or Dominick at Resintel, Michael at Resintel, Michael at the Plastic Exchange, or sales at Resintel. This is going to conclude our market intel part, and my team would be very mad at me if I didn't show off our platform. So I invite anyone who has time to stay. I'm going to quickly kind of show everyone an overview of the Resintel platform. Michael kind of touched on it before. We have two subscription levels, gold and a silver. So if you have any questions afterward about what's included on each, please message me and we can chat about it. If you also wanted to have an individual demo, we can do that. Or I'm going to do a specific just demo of the system next week, as I mentioned earlier on Tuesday, which we'll message to you guys. So I'm going to get started on that as the number of people on plummet.
Yeah, make it quick.
Just kidding. Don't go anywhere. All right. So a lot of the charts that I showed today, well, all the charts that I showed today, we made on our platform. Let me get back to them. So these are on our we call it our dashboard. So everybody that is a subscriber of our gold platform, they have this dashboard. And they're able to fully customize it, put what charts in there they want. I'm able to drop charts right onto your dashboards as well if you wanted me to make something for you. And we kind of showed it off a lot, so I don't want to spend too much time on this one because your time's valuable. But we have the 9 commodity plastic resin grades that we track, and those are available in daily prices with the gold platform or gold subscription. So every day, at the end of the day, we're posting a price. You're also going to have upstream spot monomer prices, propylene and ethylene, also crude natural gas, Brent. All of those are going to be data sets that you have, and they're available to be charted together. I kind of showed it off earlier, but you're able to layer these in. You're also able to do spreads. So if you wanted to look at the relationship between one product and another, you can make a spread chart, make it a line chart, a bar chart, set it on the different axes. Pretty much fully customizable. You can also take this chart. You can download. Yeah.
Just for 1 second. Look, there's charts, there's numbers. It all comes with an explanation, with a discussion. You're not flying by yourself. Call us. Let's get online together. Let's do a Teams call. Let's go through the market together. Let's look at the fundamentals. Let's discuss the market. Let's strategize. So it's not just, here's all the data and information. Go figure it out yourself. Talk to us.
That's right.
Look, you can post off for an hour and more than an hour. We'd like talking about the market. We're happy to do it.
Yeah, that's right. And there's really two parts to this. There's the platform, which we built with tools that we like to use and use ourselves all day. But there's also the analysis that I'll kind of touch on a little later. Michael writes a weekly. I write a daily report. The daily is very casual about what kind of happened in the resin market that day. And we'll kind of focus that in a little bit. But I just want to wrap up this dashboard. You can do different studies as well. You can do straight line average, moving averages. You can do spreads. And also you'll be able to look at some supply and demand data as well, layered with resin prices. So with our proprietary Resindex prices. So lots you can do on the dashboard. We also have a tool, a chat tool to help you query the database. So it can help you find prices and data without you having to really dig. Again, I'm not going to get into that just because I don't want to keep too much of your time. Talking about the reports. So Michael's weekly report, many of you will kind of recognize this. This is formerly the market, the plastic exchange market update, now entitled Resin Sites. And we have all of the reports that we've ever written available.
Oh my God, 1,200 of them. Right.
What's that?
1,200 of them. Exhausting.
1,200 of them. So if you wanted to go back, if you saw something on a chart and you wanted to go back and read what was going on in the market during that time, you saw in some of our price charts, we have annotations saying what was happening during that date, certain moments in history. You can go back and read what was happening during the market.
Read the COVID reports, the COVID reports, the freeze reports. How did the markets react?
Exactly. And, if you look at an old report, you can see that we've really built out these new ones. So these old ones are just a quick one pager. The new ones are much more robust. And this comes with the silver platform. We've also taken it a step further, and you have the interactive research. So the Resin Sites report is now available for you to read the panels here on the insights that Michael provides, but then also come here and you can do some quick analysis based on what you want to see. So we don't want to just show you the charts that we want you to see. We want you to be able to do work that really makes sense for your specific business. So you're able to read the report and then do some quick analysis here without having to go to a different page or remake a chart. I also want to make a note that all of our charts, when you log in, as long as you set them up properly, they're updated. You don't have to remake any charts. You don't have to take data and remake a Excel chart. It's all in there, and it's essentially
something about market intelligence. Okay, you don't need it every day, but when you do need it, you want access to it fast. I mean, I used to make these charts out of it, get my pricing, and I put together, and I put in formulas, and it might take me hours to produce certain charts that I want to see that I can analyze. It's available instantly.
Yep.
It's so fast, and you get to know it. And look, just quickly browsing through it, you can learn a lot, but when you need it, it's there for you. And I'll tell you, anybody who subscribed, anybody who had subscribed and who saw us pushing, buy resin, and when it was up a nickel, up 7 cents, now it's up 40 cents. You pay for a subscription like 100 times over.
Yeah, and I think to piggyback onto that, right now we're really living this every day. So what we're sharing with you guys now is what we're seeing, and we're certainly not biased. We're saying that we're feeling softness, and I'm very sure that some of our subscribers have probably not pulled the trigger on a high priced offer and they might be rethinking that now. So anyways, this is the interactive market update. This is available with our gold subscription. I want to move on. And again, that's a weekly report that Michael writes. I want to move on to our daily report. I post this at the end of each day. I think I wrote 230 or 240 of them last year. So this is a really quick look at what is going on in the resin market each day. With gold, you get this table here because you have daily prices with gold. With the silver subscription, you only get weekly prices. This table, this section here, this is available with silver and up, and this is the actual writing. So we talk about the resin markets. We talk about what is going on in the monomer market. Also, any U.S. economic data or global trade things that happen, and anything else interesting that could affect resin prices, like logistics issues or weather concerns. Any of these things that are going to move the market. So parts of this are silver. Part of it is gold. This table on the right is gold. And again, down here, you're able to do some research based on what you want to look at. This also is, this part down here is available with our gold. So if you move on to the Resindex, so we talked about our Resindex prices a lot. These are our, the price that we post daily. We have daily domestic and export prices in dollars per pound and dollars per metric ton. Silver, you get weekly prices, and with gold, you get the daily prices. This page here just kind of lays it out in an easier way. Right? What's that?
You pop a chart, yeah. Okay.
Yep. And then you can just pop a chart really quick here to see where things have been. Yeah, again, just trying to make it as easy as possible for you guys to get your analysis done. This section here is our analysis page. It's some subscriber specific reports that we'll publish. News. This is a kind of anything that happens in the resin industry that's sort of interest. Michael touched on our map earlier. This is available with gold, so it's global resin plants along with refineries and all sorts of other locations loaded in there. You're going to see active incidents, force majeures. You're able to see capacities. You're able to see what producers make in certain location. So if we just focus on
when there's an outage,
like up in the table. So lots you can do with this. And again, I'm going very quickly because I don't want to take up too much of your time. Also, we've created a warehouse map for the United States. So for those of us that are buying and selling resin every day or shipping product, we have a database here of resin-specific warehouses. So if you were shipping a customer in the Northeast and you wanted to see a location that you could bulk truck out of, you could use this to do that. So you can click on each bubble and you can see the services available at that location.
That's nice.
Then we have some tools that we've created. We have a section here for price increase letters, so you can kind of see what's out there right now. Okay. pretty self-explanatory. We also have an overseas freight estimator. So this is really great when I'm quoting an export customer. I can, pick Port of Houston. That's where we're shipping out of most of the time. And there's, I don't know how many exactly, but we've got most of the major ports in there. And let's say you want to click one, you'll see a couple different options for what's available for 40-foot containers. Then again, when I'm working, I like to quote my customers in their local currency. So I'm able to come here and do a quick currency conversion. So these aren't things that are necessarily unique here, but help save you a lot of time. We also have a unit conversion tool here.
Yeah, can you do the war impact, the issues?
Yeah, absolutely. I'll let you riff on this one.
Well, you have to do the click.
Yep.
Yeah. So, yeah, this chronological order, the impacts. It's hard to keep track of it all. So it's nice to see that, see what's here. You could go from here. You could go back to the map. You could look to see, what the impact is, what the volumes are. When the markets are moving, when there's a situation, this is a market disruption. This is the kind of information that we need, and we feel that others need as well. Okay, Don.
Great. Let's let them go.
Thank you so much for thank you. Thanks for listening to us. We appreciate indulging us. I hope this is valuable. And we're always available if you need resin. We're in the resin business too. And we'll see you on the next webinar.
Yep. And before you go, if you're interested in subscribing, you can do so right through the website with a credit card, or you can reach out to me, Dominick, Dominick at resintel.com, or sales@resintel.com. Again, our silver platform is $2,995 annually. Our gold is $5,995. So if you're interested in subscribing, if you like what we're saying and you want to get it every day, please subscribe. Thank you again, and we'll see you guys on the next one.